Section 1202 of the Federal Tax Code, QSBS, Qualified Small Business Stock, gives founders, early employees, and investors who hold stock in a qualifying C corporation the ability to exclude up to 100% of their capital gains from federal taxation. We're talking gains up to $15 million, or 10 times your cost basis, whichever is greater. Think about it. You put in $500,000. Your company exits at $10.5 million. Your gain is $10 million. Under Section 1202, you could pay zero federal tax on that. Zero. That's a huge saving. Now here's where Washington State comes in. Washington has its own capital gains tax, enacted in 2022. But when legislators drafted that law, they tied it to federal definitions. So, because QSBS gains are excluded from your federal taxable income under Section 1202, they also fall outside Washington's capital gains tax base. You get the federal exclusion, and you get the state exclusion, as a result of how the law was written. For Washington founders, this is one of the most powerful combinations in tax law. Right now, it exists. And until recently, it almost didn't. In the 2026 legislative session, two bills appeared: Senate Bill 6229 and House Bill 2292. Both were designed to do the same thing: close this gap. They would have specifically added Section 1202 excluded gains back into the Washington capital gains tax base. In other words, even if you excluded the gain from federal taxation under QSBS, you would still owe Washington state tax on the full excluded amount. The federal exclusion would survive. The state exclusion would be gone. This wasn't a hypothetical. These bills were drafted to target QSBS specifically. The language would have pulled Section 1202 excluded gains back into Washington's capital gains tax base. If it passed, Washington founders would have lost one of the biggest tax advantages available to startups. Remember the example. $10 million gain you'd exclude federally under Section 1202. Under the proposed change, Washington could tax that full amount. With Washington's capital gains tax rate, that's not a rounding error. That's real money that would have been owed even though you met all the federal requirements. As of now, that change hasn't become law. But the takeaway is simple. This is on the radar. If you're a Washington founder or investor planning an exit, now is the time to get the basics right. Ensure your stock was properly issued, confirm QSBS eligibility, track your 5-year holding period, and keep records. And stay plugged in, because if lawmakers try again, you want to know early.